Hi, Charlie. Here's 5 reasons why the dollar could ultimately crash. And when I say crash, I mean like a longer term decline in the value of the dollar. Reason number one is rising fiscal deficits. Now, the current administration has talked about trying to get these down, and the tariffs, which we'll talk about shortly, bring revenue in to try and combat that. But then the administration has also just said in the past week that, well, maybe we'll just use that tariff revenue to give money to people, to the lower income people across the US. So that's not exactly bringing the deficits down. So that's number one. Now another one could be a reduction in interest rates in upper IR. And along with that, a change of the Fed chair. Now, that's going to happen next May anyway, of the Fed chair. So Jerome Powell, his term is up in May of next year. So whatever happens, the chairman of the Federal Reserve will be going, and the administration is going to be wanting to appoint a new, more dovish Fed chair, and a dovish Fed chair can influence the Fed to some degree in reducing those interest rates, and that's what the administration wants. And they're very much on the case of the Federal Reserve right now in trying to encourage them to reduce interest rates. So if interest rates were to stage a more material decline, which is what the US administration wants, what Trump wants, and his cabinet want, then again that could reduce the value of the dollar. Now, along with that, what comes with reducing interest rates is potentially something else that could happen, which would make it easier for the Federal Reserve to reduce interest rates, would be a weakening of economic data in the US. There's our economic data. So a weakening of data. So far, the US economy and the data points have been all right. We've had a couple of blips in recent months, but then other economic releases come out quite positive. So there's nothing material there. I know one of the Fed members, Waller, has said that he's got concerns for the labour market, and the Fed obviously are looking at inflation and the labour market. And so, but if economic data was to start to decline, then again that would feed into interest rates, and that leads me over to tariffs. So although tariffs bring in, of course, revenue, there could be unforeseen circumstances around those tariffs. So yes, it brings in money, but it also could push up inflationary price pressures, which means that people can't afford certain products and services or stop spending. So we'll have to see about that, and that could affect businesses as well. And that then feeds into a de-dollarization. So the effect of tariffs, which are coming up next week, August 1st. De-dollarization in the global community. And what I mean by that is that with the effects of tariffs on other economies globally, other economies have started to look elsewhere to do some elements of business and where to park their money, and looking elsewhere to do that. And we've already seen that happening this year. So if that was to continue to happen, as there's maybe a slight loss of confidence in the trading partner that economies are dealing with when it comes to the US, then they're still going to do business, of course, and they're desperate to do business with the US. But is there an element of diversification away from the US, and just a little bit of diversification away from US investments, stock markets, treasuries? It doesn't need to be a lot, and again, that can have an impact on the dollar. So those are just 5 reasons that I have here. From a technical perspective, the dollar actually, we're looking at the dollar index here on a monthly time frame, is into quite a nice technical zone down here at the moment. This long-term trend line going back to 2011, and a load of price action through 2009, 18, 19, which is where it's at the moment. So it's got to do a major trend line break here in order to break down. But if it does do a trend line break, then there's plenty of scope below, and we're looking really down to the round number at 90 in that area there for its next major sort of support zone. So if we do in the months ahead see the beginnings of a break of that trend line, then there's plenty of scope below. Now in the very short term, however, we could actually see a dollar bounce in the very short term, and so we might not, but we could. So we're about to find out, perhaps over the course of the next week, whether the dollar is going to get a bit more of a bounce, given the technicals here, or whether it's going to go for a technical break. And if it goes for a technical break, then we're looking at 700 pips down to that next level. So it's a good potential run. Now obviously it's not going to do that in a day. This is a monthly chart, but that slow bleed lower is certainly going to be on if we do get that technical break. There you go. That's my video for today. I'll be back next week.